Hello and welcome to IBTimes TV. I'm Leanna Brinder, Business Editor for the International Business Times. Joining me now to talk on the Scottish referendum is George Buckley. He's the Chief UK Economist at Deutsche Bank. So hi, thanks for joining us today.
Hello.
Well, it's an exciting time. It's nearly time to vote up in Scotland. So one of the biggest game changers, I suppose, over the last month is that there seems to be an intensified support for yes vote. Months and months ago, economists were saying that it was highly unlikely. Do you still think that's the case?
Well, I think still the case is we probably won't get a yes vote because there's only a couple of polls which have actually been on the side of yes. But that said, I think everyone's a little bit nervous that these polls are trending towards the yes. If you look over the last couple of months, maybe even the last couple of years, in fact, the trend has certainly been towards the yes camp. And now we're on the eve of the poll, we are looking at a risk, a big risk, that this does go to the wire. And if it is a yes, of course, the repercussions are enormous. And that's why I think everyone's very focused on where these polls are going.
As an economist, what are your greatest concerns over Scotland becoming independent?
I think the biggest concern of all is the choice of currency. Now, of course, the UK government, the three major Westminster parties have said to Alex Salmond in Scotland, if you do vote yes, then you will not be entitled to use the pound. We're not going to offer you a currency union. And it's always very worrying from an economist's perspective when you hear the reply, which is, if you don't offer us a currency union, we will not pay our fair share of the debt. Because what that means is that it will be very difficult for Scotland to borrow in the financial markets. And also the UK, the continuing UK, the remainder of the UK, will be saddled with a larger amount of debt. Now that means interest rates on both sides of the border will be probably higher than they would otherwise have been. It all looks like political posturing at the moment, but it does make economists very nervous.
What would be the immediate repercussions if Scotland did become independent as of Friday and going through the motions of, I suppose, all the infrastructure change? If the UK did say you can't have the pound anymore and they decided not to pay their debt, what would the immediate repercussions be on both our UK and Scotland?
I think they've got to think about what the alternatives are if they don't take the pound under a formal currency union. And there are three other options. They could, for example, go down the route of sterlingisation, where they use sterling as a currency but they don't have any formal agreement. They could go down the route of EU and Euro membership, which would be very tricky and probably worse than sterlingisation. And then they could go down the route of having their own currency. And to be honest, I think that's probably the best route for them, because it means that they have control over their own monetary policy, over their own fiscal policies. They don't need to check with London if that's all right to, for example, expand fiscal policy to print money supply. They can do that to their heart's content if they like. But those are the questions you have to ask. What would you go down? What would the alternative be if you didn't have a currency union? And I think the most viable alternative would be their own currency. The big problem, of course, is that when they want to borrow from the financial markets, they will be doing so in a much smaller currency. It's only worth 8%, of course, of UK GDP. It would be a shallow and very illiquid market that they would be borrowing in. It would attract a higher rate of interest.
One of, I suppose, Sam's jewels in his crown is obviously oil, and we've seen a massive discrepancy in terms of what the OBR have said about oil reserves and, I suppose, revenue as what the S&P and the Yes campaign are saying. From the number crunching that you guys do, what is your perspective on actually how much oil Scotland has, and is the Yes campaign being, I suppose, reflecting exactly what's out there?
Well, if you look at the structure of the economies, apart from oil, then the UK, the rest of the UK and Scotland look actually quite similar. The big differences are really oil, the presence of oil. Finance is an even bigger part of the Scottish economy than it is of the remainder of the UK's economy. And another issue, of course, is the fact that demographics are not on Scotland's side. Ageing population is a bigger problem in Scotland than it is in the rest of the UK. So what that means is in the near term, budgets won't look too stressed. They'll still be significantly higher than they are in normal times because of the impact of the financial crisis. But budgets won't be too stressed in the near term relative to the medium and longer term, if you believe, like the OBR does, that oil reserves will be depleted, that output is going to fall. Now, Alex Salmond is saying, well, we're going to throw so much investment at the North Sea that should encourage firms to extract more of the oil and production might actually go up. But what you can't control for are things like falling oil prices. We've seen in the markets over the last month or so that oil prices have come down, petrol prices are falling. That means revenues will be less for the Scottish Government. Now that can be much more easily absorbed by a larger country such as the UK than it can be by a much smaller country such as Scotland. And I think those are the big issues.
If Scotland didn't become independent, there has been obviously talk that they would be granted more powers, especially over taxation, immediately after results come out. How are economists viewing this, and I suppose in terms of expectations in terms of changes in tax, for instance?
Yeah, I think one of our big worries about the political side of things is if they are offered more power over income tax raising, that means it's full Devo max. And if they have full Devo max, you have to question whether they really, a Scottish MP, for example, should be able to have a say over English legislation as opposed to an English MP who doesn't have a say over Scottish legislation. And I think this might be a big bone of contention, so much so that there is a risk, of course, that in the event of a no and the offer of Devo max, that some MPs might even decide to vote against the Prime Minister and bring about a vote of no confidence, which would require, I think, 15% of Conservative MPs, or 46 in number. Now that would be a big risk. So I think that the Prime Minister, if he does go down the route, and the Chancellor, if they do go down the route of offering more powers to Scotland, Devo max, they also have to think about how to curtail Scottish MPs' powers within the House of Commons just to avert a political crisis in Westminster.
Well, thank you very much for joining us today.
Thank you.
And that was George Buckley. He's the Chief UK Economist at Deutsche Bank.